Hi, good evening, everybody. Welcome you all to this market updates on 16th June 2022. Uh, Markets were pretty volatile. Today was a weekly F&O expiry. Um, Today morning, markets opened in the positive. Singapore Nifty also showed the positive, and from where the selling started, and it was like a one-way free fall. Finally, Nifty closed at 15,360 and Sensex closed at 51,495. Bank Nifty was also down. It closed at 32,600 and India VIX was at 22.67. Uh, Yesterday, after the Fed meet, where Fed had increased the interest rates by 75 basis points. After that, the markets in US were very positive. They were positive to the extent of 1.5% on the S&P 500 and almost 2.5% on the Nasdaq. Uh, but today morning, this gap up could not sustain. There was continuous selling in the markets. While there is a grip of fear and panic set across the globe, not only in Indian markets but all the other world markets also. US markets and European markets have corrected the most, and Indian markets were able to sustain for a longer time. We have had hardly a 15% correction, whereas the US markets have almost got into the bear territory. It got corrected by more than 20%. These are the kind of markets when we need to be invested on. This is the time when investors should choose good quality stocks and be invested in it. I'm not saying that this is going to be the bottom and from here the markets are going to take a U-turn. But what we need to understand is we have to set at least a portion of our investments at these levels. In fact, Nifty has corrected more than 3,000 points from the all-time high, so which is close to 15%. On 15%, we should definitely be ready to invest at least 25% of our plans for the future. And this, for a longer term, will fetch us wonderful returns. In case during the short term market corrects it by another 5 to 10%, then we should be prepared to add on more to our investments. You look at the stocks, look at HDFC Bank, ICICI Bank, Tata Motors, Infosys, TCS, all the Nifty 50 stocks, they've all corrected by more than 25%. This gives us a very good opportunity to buy into these stocks and hold for long term. When we invest, we know that FIIs have withdrawn more than 1,80,000 crores in the last 6 months, in the first 6 months of the financial year, calendar year 2022. But these things should be used as an opportunity to be invested in the market. If we are in case reluctant to get into investment in shares, at least we should start investing via mutual funds. Choose the SIP route. If you do not have a SIP, then you are definitely missing something very big, which will be a regret over the next 5 to 10 years. We all know markets have been like this earlier also. Between 2009 and 2013, markets did not move anywhere. It was in a very broad range. Nifty on the downside did not fall below 4,800 and did not cross 6,350 on the higher side. So when it came to 4,800, many investors said it will definitely come to 4,200 and we will wait for that to buy and all those things. But markets always surprises everybody, and once again it surprised everybody. From 4,800, we all know what is history. It came to today where it touched an all-time high of 18,500. So from 4,800 to 18,000 in 10 years. This is what is the return we can expect from 2013 to 2022, right? Similarly, even in the year 2020, during this COVID, when the COVID lockdown was announced first, immediately after the next 2 days, in fact, markets started falling by January 2020, and by March 25th, it made almost the bottom when the lockdown was first announced. So by March 25th, Nifty was at 7,500, which was a 40% downside from the all-time high. At that time, it was at 12,500. From 12,500, it had fallen to 7,500, which was a golden opportunity. But everybody were expecting it to fall down much lower. But within 1 year, from 7,500, it gave a superficial return of touching 12,500 in just 1 year. And once again, now everything is history that it has crossed 18,500, and from where it has made a small correction of 3,000 points. So I advise all investors to start investing in this market. At least, if not fully invested, at least a portion of your investment should definitely find place at these levels. And better would be to start investing via SIP. The advantage of SIP is you'll be buying this month, next month, and continuously. There will be a discipline, a pattern of investment also, which will help you create a corpus as well as create very good healthy returns. So like the famous quote that goes on saying, be greedy when others are fearful. Today there is gloom across the globe. Dollar against INR is trading at 78 rupees plus, all-time high. Brent crude is at all-time high. US markets have fallen by more than 20%, getting into a bearish territory. Everywhere, Ukraine war has still not come to a conclusion. There is tensions between China and other countries also. So when there is gloom across the entire globe, this gives us the opportunity to invest. Do not do a lump sum kind of investment, but start investing on a regular basis. Stagger your investment over the next 3 to 6 months at least. Okay, but if you miss to invest today, you will definitely be on the regret over the next 10 years. We are very bullish on India's growth story, and the India's growth story is absolutely intact. We should definitely look forward to your wonderful returns in the coming years. Right? Thank you.